1. Did Trump just break Wall Street? Unpacking the Fed chair firing saga. 2. Elizabeth Warren's concerns about Trump's potential Fed nominee. 1. Did Trump just break Wall Street? Unpacking the Fed chair firing saga. Imagine a scenario where the very foundations of financial stability are put to the test. This is exactly what we're witnessing with the ongoing saga between President Donald Trump and Federal Reserve Chair Jerome Powell. A version of this story originally appeared in the CNN Business Nightcap newsletter. Sign up for free here. https://www.cnn.com/newsletters/nightcap source =NL-ACQ_article to get more insights delivered straight to your inbox. Back in April, when President Trump began hinting at the possibility of firing Federal Reserve Chair Jerome Powell, the financial markets took a nosedive. Both stocks and the dollar plummeted. https://www.cnn.com/2025/04/21/investing/us-stock-market ? As investors grew anxious. The mere suggestion of such a move was seen as a serious breach of protocol, as the independence of the central bank is considered sacrosanct. Even Powell himself emphasized that such a move would be illegal. https://www.cnn.com/2025/04/17/economy/Trump-Fed-chair-Powell- termination, and Wall Street analysts echoed the importance of maintaining the Fed's autonomy. https://www.cnn.com/2025/06/investing/markets-Trump-Powell-Fed. Fast forward to July, and the situation has taken a dramatic turn. Trump is now openly discussing a draft termination letter for Powell with lawmakers, yet the markets seem unfazed. Stocks are hovering near record highs, and the dollar and bond markets have recovered quickly after Trump denied reports of his intention to fire Powell. This raises an intriguing question: are the markets operating under a new paradigm, where they believe Trump will never truly cross the line and interfere with the Fed's independence? Or is the concept of the Fed's independence more of a theoretical ideal than a practical reality in today's volatile political climate? The stakes are high, and the only way to truly know is for Trump to push the boundaries even further. But here's where it gets controversial. Some argue that the market's resilience suggests a new normal, where traditional financial principles no longer hold the same weight. Others fear that this complacency could lead to severe consequences if the red line is ever truly crossed. On Tuesday night, Trump reportedly told lawmakers that he intended to fire Powell, possibly as early as the next day, due to a costly renovation at the Federal Reserve headquarters. https://www.cnn.com/2025/07/16/politics/Jerome-Powell-Donald-Trump- firing. He even displayed what he claimed was a termination letter for Powell, according to sources present in the room. https://www.cnn.com/2025/07/1/business/Trump-says-fed-renovation-are-sort-of-offense. However, on Wednesday, Trump publicly stated that firing Powell was highly unlikely, unless he has to leave for fraud. Coincidentally, the Office of Management and Budget, OMB, head has accused Powell of lying to Congress about the renovation, which Trump considers a fireable offense. The U.S. has never been this close to seeing the consequences of a president attempting to remove the Fed chair. This situation should be causing alarm bells to ring across Wall Street and corporate America. Just last Friday, George Saravilos, global head of FX strategy at Deutsche Bank, warned that investors would view Powell's firing as a direct challenge to the Fed's independence, which is crucial for managing inflation. The empirical and academic evidence on the impact of losing central bank independence is clear, Saravilos wrote. In extreme cases, the currency and bond markets can collapse as inflation expectations rise, real yields fall, and broader risk premia increased due to institutional erosion. Yet the markets seem to be adapting to a new norm. As Jonathan Doe, a professor of management at Villanova School of Business, explained, the markets have become accustomed to a pattern where the administration threatens drastic actions but backs down when faced with negative market reactions. This phenomenon, known as the taco trade, Trump always chickens out, has proven profitable for investors this year. They buy during sell-offs, expecting Trump to reverse course and ride the subsequent rally. While the news of Powell's potential firing did cause some movement in the currency and bond markets, gold and long-term bond yields rose. While the dollar fell by nearly 1%, the stock market's reaction was relatively muted. Steve Sosnick, chief strategist at Interactive Brokers, noted that the bond market's response was less vigorous than expected, given the significance of the news. This muted reaction could indicate a few troubling dynamics. First, traders might be more excited about the prospect of lower interest rates, which Trump has been pushing for, than concerned about the Fed's independence. In other words, they may be so focused on the benefits of lower rates that they overlook the risks of political interference. And this is the part most people miss. The Trump administration might be using the market's reaction as a litmus test. If the initial response to the threat of firing Powell was not catastrophic, it could embolden the president to take more aggressive action. This raises the question, is the market's complacency inadvertently enabling a dangerous precedent? What do you think? Is the Fed's independence as crucial as many believe, or is it becoming an outdated concept in the age of Trump? Share your thoughts in the comments below. 2. Elizabeth Warren's concerns about Trump's potential Fed nominee. The thought of President Trump's next Federal Reserve nominee lacking the courage and intellect to challenge him sends a chill through many economic watchers, and Senator Elizabeth Warren is no exception. She worries the economic stability of the nation hangs in the balance. If you tried to find someone touting Jerome Powell, the current Fed chair, as a champion, Senator Warren wouldn't be your first call. She has consistently critiqued Powell's approach to monetary policy and criticized his steps in rolling back financial regulations. In fact, she has openly stated her belief that Powell isn't the right person to lead the Fed. But here's where it gets controversial. Despite these criticisms, Senator Warren acknowledges one vital truth. She recognizes that Powell's independence from political whims is a cornerstone of the American financial system. This autonomy protects markets and voters alike in the long run, even if you disagree with his policies. Threats to that independence, or even the perception that it's under threat, cause instability and uncertainty. This week's market turbulence is a prime example. Investors were jolted after reports surfaced that President Trump had consulted with lawmakers about the possibility of removing Powell, an unprecedented move that shakes the very foundation of the Fed's mandated independence. Though Trump later eased the rhetoric, calling the likelihood of firing Powell highly unlikely, the damage to market confidence was already done. In a candid conversation with Fortune, Senator Warren said, "I frequently disagree with the Fed chair on monetary policy and bank oversight, but I don't concoct excuses just to get him ousted. The Fed's independence is essential, and history shows that a market benefits enormously from its leaders being free from political interference." Conversely, White House spokesperson Kush Desai defended Trump's approach, stating, "The president has the right to hold the Fed accountable for meeting its own goals and ensuring taxpayer dollars are spent wisely and benefit the American people." Since his presidency began, Trump has aggressively pushed Powell for interest rate cuts, pressures that many economists now say align with the current economic demands. Nonetheless, many experts find the administration's tactics troubling, ranging from vague threats of dismissal to scrutinizing the Fed's spending on things like office refurbishments. Interestingly, some prominent Republicans share these concerns. North Carolina Senator Tom Tillis cautioned during a Senate speech that making the Federal Reserve just another governmental extension subject to presidential whims would be a significant mistake. Trump's approach, critics say, ignores valuable lessons from history. The 1970s, under Federal Reserve Chair Arthur Burns, is viewed by many as a cautionary tale. Burns, who is often regarded as the weakest Fed leader, presided over stagflation largely because he failed to resist pressure from President Nixon. This example is frequently cited to demonstrate why the Fed's independence isn't just a bureaucratic detail, but a critical necessity. J.P. Morgan strategist Jake Manookian pointed out that the Fed grew stronger post-Burns, deliberately designed to maintain autonomy from political cycles. Its board structure, staggered terms for governors, and majority voting system all protect against political interference. Looking ahead, Warren is particularly alarmed at how much President Trump's interventions may outlast Powell's current term, which ends in 2026. Trump has already indicated he'll only nominate a Fed chairperson who supports cutting interest rates, a stance that some fear could result in a Fed boss who is more a presidential puppet than an independent policymaker. Nearly every Trump appointee pledges loyalty to him before Congress, Warren remarked. While some might dismiss that as typical politics, it's worth remembering that cabinet members serve at the president's pleasure. The Fed chair is intentionally different. The goal is true independence. This sets up a challenging tightrope walk for the next Fed nominee. They must balance pleasing Trump enough to secure the job, while simultaneously convincing Congress, markets, and the public that they possess the intelligence and guts to prioritize the economy's long-term health over any political demands. Senator Warren put it plainly. The nominee will have to thread the needle between sycophancy to Donald Trump and proving they have the courage and smarts to do what the economy truly needs, not just what Trump wants. So, what do you think? Is the Fed's independence under threat, or is there merit to the argument that the president should have a stronger hand in monetary policy? Should economic leadership bow to political pressure, or resist it for the good of the nation? We'd love to hear your thoughts. Agree or disagree, join the conversation below.